Bulls and Bears this week, we've got Gary B. Smith, Tobin Smith, Jonas Max Ferris, along with Todd Schoenberger and Mike Norman. Welcome to everybody. So, Todd, will soaring prices lead to soaring layoffs?
They will, Brenda. Look, it's a simple lesson in Economics 101. When you're spending more money for life's necessities, such as food, which you said were up 5% in a year, you're going to have less money for other items, and therefore corporate profits will take a hit. That leaves corporations with two options. One, you can pass the rising costs on to consumers, which we're already seeing, or you simply start laying off people. So we have to be prepared.
Well, Gary B., Safeway, we've seen that with Safeway, but a lot of times in a recession, companies will just, their margins will shrink and they won't pass them along. What do you think?
Yeah, exactly. And I think that will be the case this time. Look, I respect Todd's macro views, and just to kind of confirm or deny that, I went back through the history tracking unemployment rate versus the CPI index, basically measuring inflation, and I could find no correlation. In fact, in a couple instances, in the early 50s and the mid 70s, we had very high inflation, and the unemployment rate was very low. Now, I'm not saying that's always going to happen, and we'll, as inflation perks up now, if it perks up, we'll see, a dip in unemployment, but I don't think they're correlated, so I don't think you can just make a blanket statement. That's what we'll see this time.
Okay, Toby. Pressure on companies, pressure on retailers, pressure on suppliers. What does that do for jobs?
It cuts jobs, but at the part of the cycle we're in right now, we've had all the investment we've seen. We've seen $1 trillion in investment in improving productivity. That's been done. Now we have an opportunity, or essentially the problem, that a company can't sort of add and buy more productivity here, so that since 70% of normal costs are labor, that is where you now go into the I can't buy a machine, now I have to lay off labor. So there is no question that it is mostly correlated, particularly, forget about the 70s, Gary, those were old-time economics. Today, all the dollars and the buying and the selling is all computerized.
But Jonas, labor costs, if we're talking specifically about labor costs, they still remain low.
Right, that's the major cost that Toby just said. Yeah. That's a major cost. Until labor costs start to rise, you're not going to see a major problem with firing people. In fact, labor costs are rising lower rates than inflation, not as much as energy, not as much as food. There's more inflation than labor cost inflation, and that's ultimately what drives your labor costs. In addition to that, a lot of companies, they didn't add a lot. That's why we have a high unemployment rate. They just did overtime. So there's not like they added all these people with a 5% unemployment rate today, and now they got to let them go because the economy gets a little hiccuped. There's a lot of people working overtime who they could ease back on without firing them. So we're not going to see unemployment rise just because consumer prices may rise a little bit. Watch labor costs. That's what you want to say.
Well, what do you think, Mike? Do you think we're going to see more pink slips out of all this inflation?
With all due respect to Toby, it's not old-time economics. It's the same economics, and I have to agree with Gary B. Smith because, yeah, while consumers are paying higher prices, somebody's earning that additional income, okay? It all stays within the economy, so it doesn't necessarily automatically equate to layoffs. I mean, if you look back, as he mentioned, and over periods of time when we had rising prices, which the most recent one was the 2007 to 2008 period, we had an increase in payrolls, we had decline in unemployment. So until the point when maybe, if it results in a recession, and it's hard to call,
it's at the expense of human capital,
though,
Mike.
Problematic. But right now, it all stays within the economy.
You have to show earnings growth, though, Mike, and you're not going to see that if your overhead costs are high.
No, because earnings are at an all-time record high, and it has not really resulted in any boom in employment. So the causation is different. You got it backwards.
Hold on. Okay, go ahead, Todd. Make your point.
Look, here, when you start looking at earnings, you have to suspect that corporations have only two options right now. Remember, they have a fiduciary responsibility to their shareholders. That's who they're looking out for. At the expense of human capital, which is sad to say, they will be cutting off people. Look, you saw that with Cisco. Cisco actually saw their numbers dip. They always experienced double-digit earnings growth, and they had to lay off 30,000 people.
Todd, some companies, are earning that income as a result of higher prices. It stays within in the aggregate, it doesn't change. It just shifts from one sector of the economy to another. That's all.
So what's that mean to jobs, Toby?
Well, with all due respect to Mike, you know,
come on, forget all this respect, guys. What happened to Bulls and Bears?
He's bigger than me. There's a bigger issue here, which is that you know, obviously jobs in the private sector, the public sector are already you know, being cut right now because of lowering expenses, and those people are not finding new jobs. The reason why they're not is they're not trained to do the stuff that we're doing in the private sector. Part of the private sector job is there's some areas of this world, particularly in energy, they can't find enough people. But for the vast majority, we have this misallocation of people, and the people that are getting fired are not just fungibly going into somebody else's job because they don't
what's that have to do with inflation?
That has to do with weak demand in general. I mean,
well, you can't have it both ways. I mean, you can't have it both ways. We have
the economy's growing.
Well,
so that's a positive.
2% is not big growth.
Well, it's about 3%.
And remember that remember the 50% of the actual earnings from these large corporations are from overseas. That's where they're actually adding people. Here's where they're cutting back.
Okay, you look amazed, Gary B. Come on, what do you think?
No, I'm not amazed. Mike made the key point. Let's just use, you saw in the opening graphic Safeway. Safeway is facing higher costs, not all of which they're able to pass on to the consumer. So say they face higher costs for canned goods or avocados. Who gets that higher prices? The avocado producers and the canned goods. So they get more revenue to them, and they're able to hire more workers. That's Mike's point. That's why inflation is not necessarily correlated to the employment rate.
Using that logic, though, Gary B., then say they eliminate that product, then it's that farmer over there who's producing that can of goods, then they have to start laying off people. That's the ripple effect, the ancillary effect of higher prices.
But then Safeway spends money in another area. They don't just go from 20,000 SKUs to 10,000
You're
SKUs.
assuming,
they replace it.
It's pure assumption.
All right, boys and girls, we're a little deep in the weeds here. The average American is saying to himself or herself, exactly. And the average American is saying, look, my prices are going. They know that the corporations don't feel it because as much because we've had no gains in cost to their employees. Well, we've now hit that point that if their costs can't get passed through, they can only do one thing, and that's lower their overhead.
If you look, the Safeway customer doesn't know their prices go up. That's the point I think Gary's making, is that they're eating some of these costs. There is a healthy margin,
pardon the pun,
point, at the profit level for corporations. They have a little bit of margin to eat some of these rising costs. I will say there is a point where all these rising costs doesn't lead to profits. If it's just generalized inflation where the Federal Reserve is trying to keep unemployment low and generating really high inflation, much higher than we're seeing now, at that point it stops becoming profits for everybody and becomes a real problem for the economy and the stock market. We're just not there yet.
Companies that got over their fear of firing, guys. In 08, 09, they fired people. They never thought they could do it. People are a lot quicker to fire than they were before.
No, but Jonas is saying we're getting to that point. We're just not there yet. Is that what it
presumably the Federal Reserve would stop the juice if it sees it getting out of control, but they are trying to engineer low unemployment. It hasn't worked out well yet, at the cost of a little inflation. That's kind of what the balance is with the Federal Reserve, always has been. Sometimes they screw it up and it doesn't work and you get inflation and high unemployment.
Okay.
We haven't had that yet.
That's got to be the last word, and that does it for the Trading Pit this week. Prices aren't the only thing spiking, so are the number of people not paying income taxes. Why the Cavuto Business Gang is saying, forget about the 1% and pay attention to the 49.5%. That's at the bottom of the hour, but up here first, pump prices pushing higher. And what's the president pushing to bring them down? Algae. Is this green agenda only going to bring more pain at the pump? Next. Talk about double trouble. Gas prices just about doubling since President Obama took office. And this week, the president doubling down on his green energy agenda, including using algae to have you paying less at the pump. Gary B., you say this fix will just drive up prices even more?
Well, I'll tell you what, Brenda, if Obama's assignment was to increase or help to increase gas prices, I'd give him A+. He must have been sitting in the Oval Office and said, let's see, how can I raise gas prices? Well, first, I'll either raise taxes or threaten to raise taxes on the oil and gas industry, thereby making it less attractive to be in that industry. Oh, but B, if you decide to stay in the industry, I'll be the most restrictive president ever on allowing permits, offshore drilling, and ways for them to access to their resource. And finally, I will divert all my the money from taxes, the public tax dollar, at least most of the money, into industries that have yet to turn a dollar a profit, like wind farms and algae and all that other stuff. This president has definitely gotten an A+ in the ability to raise gas prices.
Oh, boy, we love your sarcasm there. Mike, now you've got a fish tank. You were saying you just might as well not clean it, right?
I'm not clean it if algae's suddenly becoming so valuable. But look, here's the strange thing, is that there's not a lot of correlation between what we're seeing now with alternative energy in terms of ethanol, electric vehicles, and all of these other things that are actually causing gasoline consumption to come down. All right, and new production of oil domestically, but the price continues to go up. That is outside any of the normal rules of economics. And there's only, in my opinion, there's only one reason for it, and that is speculation, once again, rearing its ugly head, just as it did in 2008. And I don't know why we even have to talk about, have this discussion as to whether or not it's contributing. It's absolutely contributing, because every economic factor tells you that gas should be coming down, not up.
Todd is in another room, but I hear him going so wrong, so wrong. All right, go ahead and tell us why.
He's dead wrong. Listen, this is about supply and demand economics. Human beings around the globe consume 85 million barrels of oil each day. We only pump out 87 million barrels out of the earth each day. You have globalization that's taking place. Not an entire barrel of crude is used for petroleum-based products. 10% goes to plastics. When you have former underdeveloped countries like an India and a China that are now economic superpowers, they consume more non-petroleum-based products that need oil. That's it.
I think you just proved my point, Todd. I think you just said we produce 87 million and we consume 85.
Oh, but
the math right there.
Mike, you know,
you're telling me economics
are
going up in this country. We have a supply glut right in Cushing right now. Get out of here.
All right, go ahead, Toby.
Well, first off, if Mike's point was correct, in other words, it's speculation.
Which it is.
Oh, I know that, Mike.
And it's been proven.
I know that, Mike. Thank you so much. There's 6 times more oil contracts than there are oil out there. Well, if that was right, then why is it we have 20 times more bond contracts out there than we have 10-year bonds, and interest rates have gone down? If that was right, we have 14 more contracts out for natural gas, and natural gas prices are going down. You can't blame the speculators. What you can blame, however, is Gary B's point, is that the impetus, the emotion of buyers right now at the margin.
First of all, oil.
Mike, hold on for a minute.
Oil you consume, you burn it up.
Mike,
okay? It's
Mike,
something that goes away.
Just a minute. Yeah. We know you think you're right, okay?
I don't think I'm right. I'm
okay.
right.
Oh, that's fine. We know that. Can I please have Jonas talk?
Please,
all right, Jonas, please.
Bail us out.
First of all, let's just say if there was excess bond buying, it would send interest rates down because rates go down when
I'm talking about the futures contracts.
You're wrong.
Okay.
Getting back to the alternative energy. If the government wants to waste money on alternative energy, it's not economically a good idea, but it could lower the price. A lot of what the government does, in theory, lowers demand, getting to the supply and demand. When they raise CAF standards, when they say, cars have to get 50 miles per gallon, you're all going to be driving 3-cylinder cars. In theory, that will lower the demand for fuel and lower the price. It's not a good way to run an economy, but it will do that. If they sink a lot of money into ethanol or allergy, it might be wasteful of taxpayer money, but if it becomes into the mix of the fuel, and it will artificially lower the price at the pump.
Okay. All right.
Just saying.
Okay. All right. Thanks, guys. Now, can you guess who these American workers at risk from a tax cut? Something you thought you'd never hear out of Toby, but you're about to.
Well, I've never seen a tax cut in sheep's clothing here. The idea that we're, quote unquote, lowering these taxes after they blow out all the other pieces of the tax code means that most corporations would pay higher tax rates than they did last year. Now, we know from all economic and statistics is that when you raise those rates, by definition, they're going to cut costs, which means labor, and they're going to cut jobs. We've seen that in time and time again. There's no reason why we won't see it now.
Mike, what do you think?
Well, I'll say 2 things. Number 1 is the fact that tax revenue collected by the federal government as a percentage of total revenue is at the lowest level in history, and it hasn't done squat for creating jobs. Corporations are simply keeping those profits.
That's 2 things.
Number 2, since I hear all these people complaining about it, we find out that they haven't been paying any taxes to begin with. That's why they're complaining.
Mike's wrong again. Look, the problem with this plan is the idea that he's going to end up taxing foreign revenue. So you're really going to hit our multinationals, companies like a McDonald's, a Coca-Cola. That additional tax will prevent hiring down the road.
All right, Jonas, even you have some questions about this, huh?
I have some questions about some of the deals, but the overall concept of lowering the corporate tax rate, which we need to do to be competitive, especially because Japan.
But they're not. That's the point.
They are, and then they're removing deductions. Yes, there are some companies who get breaks in the tax code who are going to see their tax rate increase.
A lot.
Too bad for them. Yes, they might fire some people because of it, but everybody else is going to see a lower rate with less deductions. That is a good thing. There are some issues that were just raised. I want to raise them.
All right, and Gary B., you like simplifying the tax code. Does this do it?